Okay, so I'm making a bit of a recording just to have a record of what I'm doing here. And it's basically my daily analysis run through. So I'm going to go ahead and open up TradingView. Let's go ahead and close that. Not playing that anymore. Okay. So there's the stocks. I was just eyeing this one down because company financials and profit margins. I think there is a bit of a fair value gap in my opinion. I didn't calculate it and put it on the chart, or I calculated it and put it on the chart. It was really just somewhere like in this zone, I'd say, up into next year, somewhere in this zone, which would be a good return from now, anywhere in that range. Of course, we got the Bitcoin miner stocks. Mara, love to see Mara going down. You know, a lot of people will like draw to their technical analysis for the first time in their lives, and they'll try and draw some kind of like line here. Not there. It's probably just this. Yeah. And now they're saying, okay, new paradigm, or they're just saying, okay, let's have a retracement into the government shutdown. Because there is quite a few things that I think need to be discussed. So I'll go to my investing analysis chart here, and let's see. Where is it at? Okay, the TGA. Let me get rid of these arrows real quick. So, Treasury General Account for the Federal Reserve, which has been accumulating money lately. And if we pull up something sensitive, which I mostly do Bitcoin analysis, so we'll go ahead and pull up on the chart next to us. Bitcoin. And I suppose we'll go ahead and look at this. So generally when we have downward moves in the TGA, so we have, I guess this broad move is the best example. We have Bitcoin, doing an opposite move with that in unison. And of course, as this comes up and trends upwards, we see some consolidation and downward trend. Now, the reason it's not perfect right now is because, let's go back to where we were, is actually because if we go ahead and just get off this chart entirely, let's go to Bitcoin. And let's get back on our candles here. Daily is fine. If we look at Global Liquidity Index, GLI, this one, yeah. So where's the lag setting? I forgot the lag setting. Is there? I think that is the lag set. Oh, offset bars. Okay, so if we go to 91, which is the optimal lag set by cross-border capital, we have this general correlation here where there's a bit of a value gap, I think, in many people's opinions. Here, where effectively we had this correlation up to this point, and it started to diverge and come down. The global liquidity, like East and some of the Western world, but a lot of the Eastern world, like China and Japan, continued stimulating quantitative easing. And of course, this correlation, which I guess up until ETF's approval and stuff, has tied it very closely in terms of, I guess, this index scale to price scale. We've had our divergence here. What's important to note, though, is if we pull up where is it at? Let me just find the actual combo. Yeah. So let me go ahead and just copy this one. This is total Federal Reserve net liquidity, or Fed net liquidity is what we like to call it. Let's go back to Bitcoin with the global liquidity chart. I'm going to organize this to make it look pretty. We'll do a pane above, and we'll adjust this indexing here. And we have the 91-day lag on it. And then if we apply on here plus chart, and we're going to have to find a way to get this to go correctly. Okay. So it's a bit choppy on the 1 day. We can mark out the general trend. So let me actually bring this back down, figure this out. So We have global liquidity here. FedNet liquidity here. If I can get Bitcoin in the center, make it look good, and if we can get FedNet liquidity or global liquidity be towards the top and have this come a little bit towards the bottom. There we go. So we can see a correlation generally. Not really. The correlation is strongest back in 2021, going into about here is where it ends, really. We see it rising against global liquidity. We see it dropping kind of with global liquidity, but then global liquidity shifts up, and this is the liquidity rush that actually happened after the yen carry trade crisis back in August 24 that led to the massive global stimulus that caused the Trump trade rally that we saw. And of course, liquidity on the federal side. Actually, Epic Pen would be really useful here. Will it load though? Yes, it will. And we can see that we're going up on this, and FedNet liquidity from this point, it just goes sideways, grinds down, and even has a bit of a crash spike. As this is going down, right, we see this go down. Fed liquidity rises against it, which you could argue should have had an inverse effect and kept BTC chopping like this, but perhaps the sell-off actually would have been way worse into this range here without the Fed liquidity rising. Fed liquidity rises up to this point, it starts declining, it nukes as global liquidity rises. The global liquidity rise provides this rally up to new all-time highs. We can see that Fed liquidity rose to try and catch up, but it immediately just died. And we know this is the new policies led by Scott Bessent and Trump's cabinet, and of course a lot to do with tariffs. Choking a bit of the protein shake here, post-workout. And we got a situation where the TGA has been accumulating cash, accumulating. And that's been effectively draining liquidity from the system. And if we go back, if we remember, TGA, this is the TGA. It has been rising aggressively since July. Now if we go back to our previous chart and organize this correctly, move this back over. You can still somewhat see it. And I guess some of you could say that there's like a pattern here we're noticing with global liquidity. Yeah, there's a breakout here, right? A macro breakout that we failed to get after the Trump election, and that we got recently, and it's been keeling over sideways, like forming like a little hill, like we saw in the past, kind of like this pattern here before crashing. And we can see assets crashed. Let's actually go back and time that. So we can see that, it kind of stopped going parabolic and started keeling over here. What's that day range until the crash in Bitcoin? 223 days. Okay, when did we start keeling? About here. We're 210 days off. So if things were to go perfectly like that, which this is, I don't believe this at all. This is not what I base my moves or investments off of. You would think somewhere about in this range, which would basically be, early 2026. No, actually. Let me see. What was this distance to? Keeling over. We get the price here, 207. So then 223. Here. And that's February 2026. Of course, remember, the lag is applied, right? So we are only currently from the pattern keeling over, and this is just pure skepticism and wizardry, 116 days out. So you would think theoretically we have 100 or so more days. What is it, 109 more days or something until we get to the point of collapse? Don't think that's going to be the case. I think we're in a paradigm here, because if we look at the last time, in 2018, we had that global liquidity macro breakout here, and it dipped back below. You could argue a similar situation happened. Now, remember, stay focused here. I know it's a lot to watch. There's a lot on the screen, but stay focused with the yellow. we had this top in the 20, after the bull market. I mean, you could say, like, of course, Bitcoin's a bad one to look at here because it wasn't as closely correlated to liquidity yet. But if you pull up the S&P, I'm almost certain. Wow. Yeah, so we had the top, and then it kind of went sideways because of that liquidity drain. The lag is different for the S&P, but then this liquidity pump that did not result in anything good for Bitcoin resulted in a return rally for the S&P 500 before crashing and correlating that way. Of course, you can argue how all that factored in, how that went. Of course, then we had COVID crash, everything that happened there with that. We're going to go ahead and eliminate this for now. But we had the 2028, that cycle peak. You could use that as that peak. We peaked out in global liquidity as a response to the COVID crash. This is the bottom of the COVID crash when it happened. And we can see that they broke this out as the crash was happening, global liquidity, and it continued higher. So when we had that crash, we had rise, consolidation, rise, drop, consolidation, euphoria phase in Bitcoin. So let's mark that again. So we had a rise, consolidation, drop, grind, rise. So, I just need to mark that. I can't even remember what I'm saying with that one. So we'll do little markers here. So we had a rise, consolidation, rise, consolidation, drop, consolidation, euphoria. And let's remember this here. Remember this little section of drawings there. If we look at our current global liquidity setup, remember where our macro breakout happened. Oh, that's right. So, what crisis did we have? We had the tariff crash, which wasn't even a major crisis. What we're dealing with now seems more dire than that, because we could actually have a Silicon Valley Bank situation or something like that, because SOFR spread is so high. It's not the highest. It's not at chaotic levels, I wouldn't say yet, based on like the history of it when you look at it. I wouldn't say it's at chaotic levels like SPV, COVID. It didn't even rise during the tariff crash. But whatever our reason is, government shutdown will probably be the narrative. Something has to happen. Something has to get exposed for being insolvent. And, I'm sure the president will blame liberals for it, which it very well may be their fault. But he'll always contribute to that problem, monetarily speaking. And whatever this crash is going to be, right, we're in a bit of a weird situation where we had a fake out. We thought a breakout was coming. It didn't come. We broke out. What did we get? So on the breakout, we had one more rally. We had consolidation. We had a spike. No consolidation. Straight crash. Now we're waiting to see what happens in price action. Not trying to call fractals, because I think the only fractal that price currently lines up with is somewhere in this range. I'm going to go ahead and get rid of the Fed net liquidity, because I think the situation is clear. Global liquidity, if Fed liquidity was even just going sideways or even up a little bit, not even euphoric like everything else, would be up like this, or even way higher. And I think Bitcoin is so heavily concentrated and dependent on the U.S., especially with BlackRock and Grayscale and all the ETFs providers. And of course there's Wintermute, but with ETFs, that it's becoming dependent on that, and we're forgetting about that. But I'm going to go ahead and get rid of the Fed net liquidity. Kind of lost my train of thought. I was going to say something. Excuse me. Trying to think back to what I was saying. Oh, well, there is another situation here that's plausible, I suppose. We're on logarithmic. Okay, we are now. If we call in GLI again, we're on the 91, and we're on the 0 lag, right? What's our offset bar is 0? There is a possibility that we're in some kind of correlation like this, and you can see this up to here, which this is plausible, and I'll explain why. we see there's a direct inverse correlation here. But then at this tariff drama bottom, it comes back. There are some interesting things that line up with this. I'm certain of it somewhere. Because this is an important date. The correlation comes back. Right? And this is the 0 offset. This is the 0-day offset. And we even had an offset here, which you could say had something to do with the yen carry trade. But then something with the yen carry trade unwind was offset in terms of Bitcoin's price impact. There's a lot that we could say for that. What I'll show you is an interesting factor that plays into all of it, and it's the DXY. I'm sure you would know about this, maybe not. New price scale DXY will bring this into the equation. If we remember, we always attributed it to an inverse correlation to crypto. We can look in the past. We can see that, you know, the previous euphoric phase, of course, down, up, come up, you know, general down, crash, and then grind. Slowly grind your way up and then come up, crash, again, fuel this. Sideways movement will reflect sideways. Crazy downward movement, no upturn in price. If we come back to the current day, we look at this interesting scenario. Remember, yellow is still global liquidity, which I guess you could argue is the effective opposite of DXY, because the more power the dollar has, the less liquidity and flourishment there is in the global economy. We are sitting here noticing that Trump wins the election, and this correlation was already holding beforehand. Let's not get that wrong. Yeah. Trump won, price was skyrocketing. And like I was saying, mind is so lost right now. I gotta eat less carbs. I gotta cut carbs out of my diet entirely. And then I'll get into price analysis. This is just something I've been thinking about a lot. We had a heavy correlation, and I remember people that I follow on Twitter, which is an esoteric type of group of people. Like, I really don't follow and take analysis from people that get more than like 1,000 likes per post. I like to see hundreds of likes at the absolute most, just because of esoteric knowledge and stuff. People that are getting heavy likes tend to have already been traded out of effectivity in the market. So we had a heavy correlation. And then, you know, global liquidity with no lag was not working, right? And of course it had always been the lag applied. And then we finally had the dollar going down and finally had price reacting accordingly somewhat. So that was just an interesting factor, interesting part I wanted to get to. This general bottom here was about when the stock market bottomed somewhere in here, and I remember Trump said to buy, and he actually was able to bottom take the stock market. I wonder if some secret deal or something was signed and put into effect somewhere. That was interesting. Good to see global liquidity trying to fight back this negative downtrend, because you can see the calculations. This indicator keeps getting updated by this guy. Props to him. We can see that it's been trending downwards, and it really looked really dire. You know? Maybe it starts coming back up something over the long run. We don't know. It could just keep keeling over. I doubt it. There's a lot of reasons, you know, not to believe that. Let's look at price. Let's check out the VAMS models, the volatility adjusted metric range thing, whatever. Yeah. A lot of oversold signals getting fired, but, you know, downtrends don't care about those oversold signals. Cash for Bitcoin. We had a lot of people longing this bottom here, thinking it was the bottom. It makes me wonder a lot. No. These aren't it. Where is it? funding rate? Okay. Not what I wanted. Be 93,000. There we go. I was putting in an S at the end. Liquidation meters. Deluxe algo. Oops. So in my settings here, I have the color set up a certain way. So this gold color, which I'll make a little bit more opaque. I'll make all these more opaque. Remember, 25x leverage, which really is just indicative of the number compared in the millions. And then 50x in white. And then leverage in gold. These are the long liquidation levels. And we can see that we've already taken out 98k. We're looking at 98 flat, 96.9, 96.0, maybe 95, maybe even 92. Are you prepared for this one to get taken out at 86k? Are your expectations prepared for that situation? Systems are fully in cash right now. My personal systems. You can look at my Substack for that. Fully in cash. I guess this is plausible, but then you would think for this to happen, you would need on-chain indicators, so fundamental on-chain indicators, to indicate that we have much further to go. And for market makers and for institutions and whatnot to be longing the hell out of the bottom. Every time we hit a new liquidation, flush out, right? We get more longs opening up below price. Right below price. Heavy longs, like 50 to 100x on like how it's marked on this one. And that eventually would get you to a cluster to get to this zone. And maybe from there and only there, would you really convince everyone that it's over? That it is bear market time? There is quite a bit of people running bear market fears and woes. If we go to market cap, it's a great source, and I'll go ahead and open up CoinInc on the side to show what I'm talking about. The Fear and Greed Index, the last year or so, last 2 years, has really done a good job of reverting when you tap into the fear zone multiple times. And after that, you get run-ups, you get your trend resumptions, but also hitting the extreme fear zone and touching into that. We have been touching into the fear zone, but I think it would be very great, and I think it would be if you were a dollar cost averaging enjoyer, strategically dollar cost averaging, I would say, you would want to see this hit first before you start dollar cost averaging fully. I mean, every time you get a dip further into fear, the strategy, whatever you have, I would think most likely you would be allocating a maximum of 30% of your capital over the course of weeks as you stay in the fear zone with price. And also assuming your system does not set price goals, but rather system and fundamental goals. I think you see what I'm getting at here. So I want to see this go lower. That's what I want to see. Will I see that? I'm not sure. I'm not sure we will. We may not. We may sit in this zone of general fear for a long time. For another month or so. Might not. Excuse me. The market overview dashboard shows that we're mostly Bitcoin season. Looking at your main coins, XRP eating shit, Solana eating shit, Ethereum not really, kind of eating shit. We can see that we've had, 5 straight days of ETF outflows. I think yeah, that's about right. That's it for that dashboard. Wow, that's pretty sad. I thought there was more. Maybe I'm thinking of one here. Okay, similar situation with this Fear and Greed Index. And there's Bitcoin price, there's the Fear and Greed. I thought there was a better coloring scheme for this. So we can even see it here. You know, your sub 20 zone, I'm assuming. 20, 40, 60, 80, 100, yeah. So like your sub 20 zone, wow. I suck. Why do I keep doing that? Yeah. So when you get tapped in here, yen carry trade, you get tapped in here, Trump tariff crisis, you get tapped in one more time, the bottom. We have yet to tap, wiggled close by. I think that's the interesting thing. Do want to look at Bitcoin dominance too. We have places to be though, so I gotta hurry. Quotation heat map. Systems today, they're gonna be unchanged. They're max short. It's been a rough day. Okay, so in the short term, definitely a proximity to take you down towards that 96k level that we pointed out on the map. But there is heavy 105. You know, sustained rally, nuke, could happen again. Or this could keep building up and people could think like bears are getting away with murder and then you kill them. It's like they killed us longers. If we go to the 6 month, it's one of my favorite ones to look at here. You can see over the long run, these are building up. Still got this here though. It's about at 97, 96. I think the 1 year gives us a really good perspective on everything here. Yeah. It's like I said. Building up close to 120, building up close to 130. Long run. Cannot forget about those. Those will get taken out. We've got the sub 100k. We've got even the 90k range. And like I said, the theory is that your market manipulators or even liquidity, like crisis, whatever the forces at play, see the excessive longing continue to form below price. Take out, keep longing, keep thinking that it's the bottom, trying to bottom ticket instead of dollar cost averaging in. Accumulate, wipe this out. Oh, might as well go here. And perhaps by then everything's exhausted, but who knows, maybe these are accumulating slowly the whole time. Explodes, get wiped out. And past that, I doubt I would see anything else go further. I'd imagine like when you go through this zone, it would be a candle wick for just a day, and it would aggressively come back. Kind of situation where fees are super high on all exchanges, and it's hard for you to buy it unless you have a limit order set. I personally won't be leaving that up to the exchanges. I will most likely, unless it's gold, pure gold of an entry, and I can, the fees aren't too crazy for my liking, I will be re-entering on a trending signal on my systems. Let's go back to this. Look at Ethereum. Why not? So we have the Ethereum VAMs. I guess oversold, but like I said, I'm not a bear. When I'm looking long term, my long term bias is still max bull. I don't find it unreasonable to see Ethereum hit something like, anywhere from like 6.5 to, I guess 10,000 is possible. We'd have to see extreme euphoria. I would honestly, if I would be letting go of Ethereum by 8,500 and really dispersing into the alts. If I see Ethereum hit 7,000 and anything higher, I'm scaling out of it by the day or by the week, by every 3 or 4 days, and I'm going into alts aggressively. I think that's just what you have to do. Let's see. Yeah. I want to see this chart go further, but it might not. You never get what you want, truly. Look at this candle. It's funny. What else do we have? We could look at some coins. Good dips on some of these coins. Now, a lot of these coins you see here that are actually going down, look at where they went on the recent crash, the exchange crash. Here's Athena, 15 cents. We're at 30 cents right now. And of course, yeah. Oh, 50% drop to get there. Keeps grinding lower. There's a lot of people who we actually executed a trade on Athena. I think we were in this zone here. We bought it like 0.45, and we sold on this green line here, 0.51. We didn't quite top ticket like we wanted to. No one's going to get that lucky. But we did this because there was massive short liquidations above price. I doubt liquidation chart from Lux Algo will show that. Okay, yeah, kind of. That's not an accurate one, but there was a heavy short squeeze. Kingfisher was indicating it too, but a lot of these alts, man, you know, they crashed. And look at Doge. Doge is down here to this level that it hit below. Link, not quite. Op, not quite. TRX, just been eating shit the whole time. It's been a very reliable coin. I mean, it's cheap. Whatever, AVAX, XRP. I guess we should get into like the risky sharp coins. Talbot, it's one of my preferred ones. Cetify is interesting because this is a company that isn't giving up, and a lot of these coins just keep bleeding to death. And you know, the chart looks even worse when you put it, instead of against USD, you put it against BTC. Oh, I did the index. Why is it not working? I think I'm doing it wrong. I might need to do the market. I haven't done ratio analysis in a long time. How am I messing this up, though? It's kind of crazy. There we go. Yes, you can see it bleeding against... Like, this is... Oh, my God. Like, this is bad, man. Like, yes, you want to catch these rallies, right? You want to catch this. You want to get in somewhere here, cash out somewhere here, you know, get in somewhere here or here, cash out somewhere here, or preferably up here, right? Like, but we haven't had anything reasonable with something like Cetify in a long time. And a lot of charts look like this. Let's go to Avo. This one, the green line is where we bought it at. We thought it was going to show good strength, but clearly not. These coins are going to bleed further. And if you're wondering, oh, what's the quantitative, what's the data, what's this? There's a few metrics. So this one? Yes, it's this one. Now, I first discovered this through Benjamin Cohen. Not even going to act like I did discover this myself. He's got a great point. So basically, total 3 minus USDT ratio to Bitcoin, or denominated in Bitcoin. There's a zone of 0.25, but there's also a 0.31 zone that it touched back before the July rally, which we thought, okay, if it hits here, this marker came in when it hit that point, this box zone. But I think what really needs to happen, we had a wick into the point, this box again, but it didn't mean anything. Let's look back. When we had a wick touch 0.25, we had a nice rally, but it wasn't until daily candles were closing consecutively. A better way to look at it is to go to the 1 week chart. And I think I should just clear everything, and draw a line at 0.25 and show you what I mean. We had a wick go up, we had a wick go up, we had a close major rally. Haven't had even a wick yet. We may see a wick with a mini alt rally in the future for complete capitulation, rotate to Bitcoin again, and come up. We want to see, but the long story short is that we need to see total 3 against Bitcoin come into this 0.25 range, preferably relatively soon, before having a giga rally. And that's when your alt season will begin. So what's the strategy? The strategy is to either have a system that manages mid to, small mid caps, and you disperse between those, and you kind of rotate between those as Bitcoin is in a positive trend. Or you just stick to the majors, like top 10 coins, rotate between whichever one is performing the best. Mainly stick to Bitcoin, Ethereum, maybe Solana. Make your gains from those. Turn your 1,000, turn your 10,000, turn your 6,000, turn your whatever amount of money. Turn your $5,000, by the end of it, into almost 10,000. Then you can disperse into alts, and instead of making, 100,000 off the 5,000, now you have almost double that. You make yourself almost like $200,000, $300,000, $400,000. I think that's the way to go. I really am just sick of looking at this. I've done my systems. I've done what I needed to do. I guess we'll check out the server. What did I post? Yes, I had this post, which was saying that mathematically speaking, Ethereum would cap out at around $7,200 theoretically. That's if it hits here at the end of the year. If it goes further, what would happen? That'd be interesting. ETH would only go lower, which indicates an end of the year rally might be inevitable. I'm not sure though. Everything, and like I said at the bottom of this, it's valid, but remember, everything works until it doesn't. We had something from VI Research who's talking about his bottom tick indicator, which has worked so far since 2023. We had a post from Raoul Pal. Had way too many likes, like 11,000 likes. But it was a great point. Was this? Yeah. Talking about the STH realized P&L ratio. Yeah, what did I say? Notice that some more sideways to downward grinding in price follows these STH are. Yeah. Ratios bottoming out. If we go lower, expect a week to 3 weeks of chop and accumulation. Alts are a good bet when BTC is low, probably top 300 alts. I ought to do a comparative analysis of the 400 100 alts. I'll do that tonight for sure. 400 to 100 alts. Yeah. And if we look at this post, actually, in this image, you can see that, like, oh, look, bottom. What did price do at these bottoms, though? Consolidation, kind of grinded up. More consolidation, grinded up eventually. We got here. Probably grinding before the euphoric phase, before the rally. Expect that. That's reasonable. Same with the tariff crash situation. Similar thing happened. We didn't have a full capitulation, but we had enough to where we hit this first little nuke here. Is that there? No, it's there. And then we chopped and actually hit another dip and then came up. But maybe that second dip was because the first one wasn't big enough, right? As big as these. That's why I needed another one. Who knows? Who knows how that works? It's very nuanced. There's no set rules that I'm saying here. It's really just speculation and theory. Expectation management. Stablecoin supply ratio, yeah. Notice that it hasn't bled this hard since your COVID crash and your dip before reaching all-time highs again for Bitcoin in 2021's rally. I would say expect consolidation in price, probably. A lot of these dips, like I said, you have your dip here and then you have a little bit of consolidation before the rally. You have your dip here. You went up because of stimulus from the Fed. Will we have a crisis related to the government shutdown and a bank collapse or something? SOFR, as I mentioned earlier, which prompts the Fed to stimulate and bring us up higher and more aggressively. You would think that if that happened, price would also have to go lower. Maybe there's a bid in place for Bitcoin to not go that low. Who knows? You can't know the future. I think that's going to be it for me for today.